Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me at Financial Square Finance, and if you want to join our community, finding-value.com, that's where I dive deeper into all these topics, subjects, looking for potential investment opportunities, sharing those opportunities with everyone in the community. I've been going over the presentations for some of the companies that I think look like good prospects so you guys can understand a little bit better what those companies are all about. We do have a coupon code. It is special. Coupon code, quote, special. It's in the description link below. Check it out. It's a little bit larger discount. We're going to be running that for probably till New Year's, and then that will deactivate. So you better get on it over the next week or two. And if you are interested in trying out the website and getting that larger discount, it applies both to the monthly and yearly membership. The monthly membership is only active for the first month. The yearly membership's a larger discount, and it also goes out into the future. So Lance Roberts, technically the market is oversold enough short term to generate a bounce into year end, in his opinion. This is the S&P technical composite last 24 months, overbought areas, and then oversold areas. And then you get the bounces off these oversold areas. So these oversold areas, if you're a long-term investor, quote, buy the dip, those are the dips that you want to purchase. Now, this one's about Bitcoin. So Bitcoin is not digital gold. Gold is not a network asset. If you hold it, you hold it. I moved apartments recently, and I simply took my gold with me. You can't do that with Bitcoin. You need to ask, quote, the network to move your Bitcoin from one address to another. If the network says no, you're screwed. The miners can say no for any number of reasons. You used a mixer, the address is under OFAC sanctions, the fee is too low. Sometimes people pay up to 90% of the transaction value in fees. The network, which only supports 7 transactions per second, is clogged. You got on the wrong side of a giant mining pool, and they refuse to honor your transaction. You added valuable data to your transaction, and the holier-than-thou miner considers your data to be spam. A network asset only has value when the network itself is trustworthy. This is why in 2013 and 2017, Bitcoin hard forks were so scary. They were make or break events for trust in the network. Right now, there's a lot of trust in the Bitcoin network. That won't remain the case forever. Gold is trusted by 7 billion people as a store of value. That will remain the case forever. There is no digital gold, just legacy tech trying to ride gold's coattails in a last grasp for relevance, in his opinion. He's getting a whole bunch of crap for saying that too. Some of the people responding to that thread. And I don't know what it is, but if you talk at all bad about Bitcoin, the rebuttals are absolutely a joke. It is basically a bunch of people running into it to buy it, and they have no idea what they actually own. The rebuttals are pretty poor, in my opinion. Josh Young, the EIA forecasts North American LNG export capacity to more than double by 2028. Double by 2028? That's right around the corner here. With accelerated build times and potentially lower costs, the next wave of facilities after this could come as soon as 2029, or even sooner if Trump follows through on expedited permits. So this is North America's liquefied natural gas export capacity. It's on track to more than double by 2028. This tie was updated September 6, 2024 to clarify a data point. So this is North America liquefied natural gas export capacity by project. Here's 2024, and we are coming right into all of these LNG terminals all across North America coming online. And this is for Canada, Mexico, and the United States. And these are all the projects coming online. Now, Goring and Rosenzweig recently wrote an article on depletion. They had wrote that natural gas could potentially be in trouble for production, the supply in the United States. And we've got all this LNG capacity coming online. This is going to get interesting. Now, I don't know if we're going to peak, but I'm invested for it. I'll say that. I'm invested for all of these. So natural gas is the cheapest commodity on a ratio perspective. It is by far the cheapest. It makes silver look like it's incredibly overvalued. Like that's how cheap it is. And natural gas is cheap to oil, and oil is cheap to silver, and oil is cheap to gold. Oil is probably the most valuable commodity, one of, for the entire world. It created our modern society. So natural gas is up there in terms of its undervaluation, and we could be, and I don't know if we are, in a situation where we'll struggle to increase production at the same time that takeaway capacity is going to double for liquefied natural gas. That's an insane opportunity in natural gas right now. And obviously, guys, on the website, we talk about these companies. I may not be actively buying some of them because I already took positions in it. We bought the bottom in 2024, and now the fruits of our holdings, we'll call it, are going to go ballistic, Goose. Now, is it going to be a straight line? Maybe not. But just sit and just wait. This is coming, guys. This is your fundamental thesis to be in natural gas, along with the setup that we had in 2024 with the ratio being the lowest it's ever been. That's your setup. Now, is it going up as fast as some of the tech stocks in the short term? Well, yeah. Some of the companies are up over 100% this past year. Over 100% in a year. And people are saying, well, look at oil. Oil's down there. Natural gas is still down there. Well, it's 100% return on one of them from its low to where we are today. Over 100%. And this is coming right ahead of us. Now, did I invest in the short term to get that 100% gain? Not really. I mean, I didn't know it was going to go up 100% in a year. What I did is I bought it when it was cheap. I bought it when it was undervalued. I bought it when the chart looked like it was just cheap. I took a shot at it. You buy it, and then you just hold on for what this is coming. Now, if Goring and Rosenzweig is right, I make a whole bunch of money. I mean, a whole bunch of money. Probably 10 to 20 times my money on that individual position if they cannot produce more. Because what's going to happen is people will realize, holy crap, we've got a problem, Goose. We've got a big problem if this comes online and we can't support all of this natural gas to these terminals. You know how high the price of natural gas will go? It's not going to be at $2 or $3 a million, MMBTU. It's probably going to be more like 5, 10, 15, 20, maybe even higher. I don't know. So it's not about taking, too many people are playing they're playing checkers, guys. They're playing checkers. They're like, oh, I'm going to jump this guy right here. And what I'm doing is I'm playing chess. I'm playing chess. I'm positioning my portfolio, which is the game. You're playing the game. You're positioning the portfolio for what is coming. And then you say, well, how important is this energy to the world? Well, that's what backs our entire modern society. That's what backs all the wealth of people. It's all an energy game. Now, if there's a problem in energy, the delivery of energy, all of that problem is going to go right into energy to solve that problem. Now, my question is, are we facing a problem or are we facing a predicament? A predicament is something where we don't have a solution. We have to manage outcomes. So if we do, and I don't know if we will, I'm just saying if the United States struggles to produce more natural gas, and if the United States struggles to produce more oil, those are two of the main drivers of energy in the world, providing all of modern society its energy needs. And everything that we've done to create modern society is using extensive pieces of equipment, harnessing that energy through that equipment to change the world around us. And this is coming. And we'll see what the United States can do in terms of production to meet all of this takeaway capacity. RevCap says home builders are forced sellers of any homes they decide to build and accept the market price. Existing home market still is in this bizarre disconnect due to mortgage rates, the lock-in effect, not clear on how long it can persist. And what this is saying here is that the median new home sale price is lower than the median existing home sales price. Now, you have to take this not at face value. So what the builders are doing is they're building cheaper homes too. It's not like they're going out and building a bunch of expensive homes that no one can purchase. There's a dead spot kind of where affordability gets hammered at certain price ranges. So what they do is they start to build cheaper and cheaper homes, which is the low end, and then maybe they build some of the expensive homes for people who have more money. So that could also be a driver. Historically, though, affordability hasn't been that big of a deal to cause this type of inversion. Wasn't the tanker thesis dead? And then multiple brokers reporting today that Exxon has chartered a 2023 and 2025 VLCC for 3 years at $50,000 per day. Just an FYI for those that are in the tanker area. Breakwave says, going forward, electric car adoption in China is poised to remain a headwind for the tanker shipping market and a tailwind for the dry bulk shipping market as coal will continue to benefit. So that's the difference there. One deals with oil that drives it, and dry bulk ships all the coal and minerals for all the electric vehicles and powering the electric vehicles with coal. Peter says the most important chart for 2025 in his opinion, and what this is the U.S. net interest payments on federal government debt going vertical goose. Forecast assuming the extension of the TCJA Act and market-based interest rates. That's the red line going vertical here. That verticalness is measured in the percent of GDP. So if you were to look back here in the 1913 when the Federal Reserve was created, and they said that we had to have a Federal Reserve, it was basically close to zero. And now we are going all the way up, maybe passing 4 or 5% over the next few years. Yeah, no problem there. Yeah, let's put a Federal Reserve in there. Gold silver, it says, while gold is stored, silver is consumed. Its scarcity is growing daily. We could get into a situation where if we continue to consume silver, that the ratio of above ground inventory of silver and gold may not be all that different. We may have above ground silver and gold inventories being equal at some point because of this silver being consumed. Global Market Investor says how bad the U.S. debt crisis has become. It says U.S. fiscal deficits are projected to average a massive 6.3% of GDP over the next 10 years. The 6.3% is up here. So that's coming up over 10 years and heading up over here. It says U.S. fiscal deficits are projected to average that. Such deficits have never occurred outside of major crises and wars. This projection also assumes no recessions, and that's your tax revenues. Debt crisis is an understatement. Look at the projected 10-year average deficits here. My Lord, what is going on here? Spend, spend, spend. James says drawing parallels between today's inflation and the 1970s is a lazy shortcut for pundits who can't, oh gosh, where is it? Lazy shortcut for pundits who can't be bothered to analyze the current economic landscape properly. They conveniently ignore the fact that the second inflation spike in the late 1970s was triggered by a distinct and severe supply shock. The Iranian Revolution of 78-79 threw the global oil market into chaos, slashing Iranian oil output by 4.8 million barrels per day, a whopping 7% of world production at that time. This crisis, compounded by the Iran-Iraq war, sent oil prices skyrocketing from $13 to $34 per barrel in just a year. It's this kind of seismic event that drove the double-digit inflation rates of the early 1980s, not some mysterious economic cycle that's bound to repeat itself. You know what I hate to say? What if shale oil production peaks? And same with natural gas. If that actually occurs, this would be a small move. Because what we're dealing with is this was America back in the 70s. We hit peak oil in 1970, and that's what created some of these moves. And then we went and consumed and imported oil from other countries. What if there's no other country to import oil from? What does that world look like? What if we hit world peak oil production and we never can increase it again? What does that mean? Can currencies survive that? Can the answer, in my opinion, is no. I think interest rates are going to spike. Currencies can't survive it. And then we're all going to just go to war with each other. That's probably what will end up happening if that were to occur. This is the single best long run measure of food inflation, and it's gone vertical. This is Campbell's condensed tomato soup unit price per can, January 1898 to January 2024. All I want to show you is this. It was 10 cents or under the entire time until we broke the gold back currency system. After we broke that, it's been smooth sailing higher. Now we are going vertical goose. We're at $1.20 per can in 2024. Does that look healthy? Is this an end of game move here where this just goes to hyperinflation? I hate to say it, it could. It really could. And then the question then becomes, well, how do you position for it? How do I protect myself so I can buy Campbell's condensed tomato soup in the future and I'm not paying my entire paycheck for it? This is a bad situation, and I feel like I'm prepared for it. I kind of am, and I don't know. Maybe I'm not. That looks ridiculous. It kind of scares me a little bit. I'll be honest. And here's more, more support of this ridiculous inflation coming. It says this chart is now backtesting the blue huge support trend line. Note what happened after the last big blue breakout. Forget the nonsense from uninitiated analysts talking about miners not being the place to be now. The metals and the miners is the right place to be now. Gold and silver they are the counterweight versus the defended global fiat monetary system. And it's dying. So, and that's what we just looked at with Campbell's soup. So it should be obvious not to expect this bull to be easy. As said many times over, expect it to be hard, very hard. And do not get disappointed, i.e., emotional. Understand it instead. The volatility is going to increase hugely as the present monetary system dies. To get through this and get on the other side in one piece in the best way possible requires the best guidance there is. The breakout 1,250, and we've got another breakout back test for the Huey, and this is when you want to be in it. Coming from the bottom here. Down, silver's now getting ready for the mega breakout coming in 2025. It is all set up. And people just, oh, it's not going higher. Guys, I hate to break it to you, but you may have to be in this just in order to make it to the other side. It's not a matter of a want. It's not a matter of short-term, we'll call it short-term gains. That's not the game anymore here, guys. This is more about like, this big event could be occurring where you get these problems with currencies, and it's like you kind of have to be in it to make it to the other side. If you don't have anything and all you have are these paper gains that you never transferred to real things, well, I would be pretty scared. But that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got that special going on. Special is the discount coupon code if you'd like to use it. But that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.